Do you get a tax refund every year?
I spent my refund on a digital TV with surround sound.
Should you?
Yes, no, maybe.
In today's video, you will learn whether you should take out additional taxes from your paycheck. So if you're someone who works and pays taxes, you'll want to watch this video till the end. When you first sign up with an employer, they will usually give you a TD1 form. Looks something like this. And where it says additional taxes to be deducted, you can voluntarily choose to have more taxes taken out of each paycheck. And if you wish, you may ask your employer to fill out a new form to change this. But why do people insist on having more taxes withheld? They use this like a savings account. Get an extra $50 or $100 automatically taken out of each check, then come tax time, they will receive a big tax return. But all a big tax return is you overpaying the government the taxes you owe. So it's like a savings account that you can't touch and you can't earn interest on. An interest-free loan to the government. I understand that some people have a hard time saving, so they do this strategy because it's literally a foolproof way to save. But there is a better way, which I'll discuss later in this video. Your employer should be taking out the proper amount of taxes based on your income from that job. If this is your only source of income and have no other deductions or credits, you should have a small refund. This is ideal. They say a big tax refund is a sign of poor tax planning. Now, there are situations where you won't receive a refund and you may owe the government taxes. This is when you should take advantage of additional taxes coming out of your check. Like if your income is different from week to week, or if you have a second job, or maybe you have a side business or rental income. Any additional income may change how much taxes you owe. So withholding additional taxes can offset other income. And if you have a little side business, depending on how much you make, you may need to pay taxes in installments. But if you take out additional taxes, you may avoid this altogether. Also, if you work in a province that pays less taxes but live in a province that pays more taxes, you could choose to pay additional taxes to offset this situation. Now, who shouldn't take out extra taxes under any circumstances? Anyone with high interest debt, so your credit card debt, line of credits, and personal loans. If you carry a balance on a credit card, you're likely paying 20% or more in interest. The longer you take to pay this off, the more interest you will pay. So instead of smaller paychecks and a bigger return, go for a smaller return and bigger paychecks and use that extra income to pay off your debt as quickly as possible. If you have no high interest debt and you do want to save money, what should you do instead of taking out additional taxes? Open up a high interest savings account at a different financial institution. Why at a different financial institution? Two reasons: better interest rates and more resistance. Some of the best savings accounts are Motive Financial with a current interest rate of 4.1%, Achieva Financial with a current interest rate of 3.4%, LBC Digital with a current interest rate of 3%, and EQ Bank with a current interest rate of 2.5%. And since it's at a different financial institution, it's out of sight and out of mind. Then you'll want to link your current financial institution to the new one. Once you do this, you can set up automatic transfers. Just set up the amount and how often. Then once you get paid, a set amount will automatically transfer to your savings account. Once you have saved up for your goal, you can easily transfer that money back into your spending account. Why is this better? Well, first, money loses its buying power every year due to inflation, usually 2% loss, but even more as of late. So when you give the government extra money to hold on to, they give it back to you essentially with less buying power. So to keep up with inflation, you'll need to earn a decent interest rate. Second, what if emergency happens and you need that money now? You can't just call the government and say,
"It's my money and I need it now."
You'll need to wait till April of next year till you can get it. But if you have it in cash in your own savings account, you can withdraw it at any time and get yourself out of a bad situation, instead of using something like a credit card and end up paying interest. And if CRA goes on strike, it may be even longer before you see your refund. And lastly, when you do get your big refund, it's very tempting to blow it on whatever.
I do not understand what you spend your money on.
Mentally, it doesn't seem like you saved the money. It's more like money the government is just giving you. But if you have your cash in a savings account, you'll be more accountable and may think twice before spending it. So you might end up growing your account more. Now, what if you're saving for a long-term goal? A savings account may not be the most efficient way to grow your money. Depending on your situation, you may want to replace your high-interest savings account with an investment account. This would be for long-term goals like retirement, real estate, or your children's education. If you're interested in investing your money, click the link up here or look for the link in the video description below. To sum up this video, taking out additional taxes out of your paycheck should only be done when you have a tax situation that will cause you to owe taxes come tax time. You may think you're smart for using this strategy like a savings account, but your money loses its value due to inflation. Then there's the lost opportunity costs. You may have to pay more in interest if you're in debt, and you can't withdraw this money in an emergency situation. Instead, open a high interest savings account for short-term goals and an investment account at a brokerage for long-term goals. Either way, you should learn how to save your hard-earned dollars so you can be more efficient with your money and reach your financial goals sooner. You can do this by watching the video on the right of the screen. Thanks for watching. Until next time, keep making money moves. Peace!